Hello everyone. So the structure in gold is very much sideways, as you can see. If you look at the 1 hour time frame, then in the 1 hour market is still bearish. We have got this liquidity sweep over here, right? If you look at the structure very closely, we had this high, this low, and then this high just to sweep out this last high, and after that market dropped, giving us a market structure shift. And after that, as you can see, market went up, and if you look at the 4 hour, then we had this order block over here, which is acting as a major resistance, and from here market got rejected, right? So since then market is still around this zone, just sideways, not going anywhere, not breaking the range, not doing anything, just sideways. Let me just give you a trade right away. You can sell gold right now. Take a sell quickly. I'll explain what's the reason. Stop loss will be just above this high. Okay, take a sell right away. And according to the structure, you can hold it till here. If you want to make a better risk reward, you can make it at 1:3. Okay, that would be better. So this will be a trade setup in gold, and the reason is very simple. Let's talk about it. So like I said, the structure in gold is something. Also, I would say keep it a little bit of more room. Okay, just a little bit of more room, because this is just liquidity sweeps and nothing else. And here I can see we have got the equal highs, right? So just a little bit more room above the last high. Okay, so now let's talk about the structure. So in the 1 hour, I was telling you that the market has created this market structure shift, and after that this was a 4 hour supply zone. If you look at other brokers like this one here, you can see it much more clearly. So in the 4 hour, if you look over here, we have this order block candle, right, along with this fair value cap. So the fair value cap has been already tested, and market went all the way to test this order block. And from here you can see that there was this rejection, and since then market is just sideways within this lower support and within this higher resistance level, right? And this is where market is trading throughout the day. Since yesterday, you can see this was the Thursday low, and from here whole day yesterday and today also market is just sideways, completely sideways. Now let's go back to wonder. So here obviously the structure in the 1 hour is still bearish, and in the 4 hour, like I said, we have this auto block from which market is showing rejection. So in the 1 hour our bias is bearish. And if it is bearish, that means that market wants to drop to the downside. And if it drops downside, then what is going to be our target? So it's very clear. We have got this relatively equal lows over here. They're still not taken. So there is a very high chance that gold will come down to take out this lows sooner or later. So this is going to be your first target to look for, where we have got the liquidity. And below that, we have got the next low, which is over here. And this is going to be your next target. And once these two targets are taken, these two liquidities are taken, then you can focus on the lower time frame, on the lower level, which is going to be this zone, which is the daily fair value gap plus the, you can say, breaker block according to the ICT. So we have got this major zone from which we'll be looking for a buying opportunity. But till then, market has to come down to tap into the zone. So that means till then our bias is very clearly to the downside, and we are only looking for sell opportunities. Okay, so now let me tell you why did we sell. Here you can see that market created this high, came all the way down, but did not take out this low. And then again market went up to take out this high, and once again market came down, gave us a pullback, and then dropped and broke structure to the downside, right? So once again in the 1 hour, if we just talk about this zone over here, not considering this one, just this zone, then 1 hour is bearish over here as well, right? So here we can see that market created this market structure shift. After that, market created this new lower high, right? What are this? These are lower highs, right? Because the last high was above these highs, right? So these are lower highs, and these are equal highs, by the way. That's why there is going to be liquidity above these highs. That's the reason I told you that keep your stop loss just little bit, give a room so that these highs can be taken, and then market can drop once again, because the overall structure is still very much bearish, right? But in the 1 hour, we don't have any POI. It's just a game of liquidity. In the 1 hour time frame, we have just got swing highs and lows. That's it, nothing else. There is no POI that we can use to take our entry, even though our bias is clear, which is to the downside. But since there is no POI, okay, it seems like gold took out this equal high, so now it should come down from here. So yeah, I'd actually like to just hold the trade for a little bit, because like I said that these highs will be taken, and they have been taken. So now I think it should drop according to the structure. So in the 1 hour, there is no POI. So let's go to the 30 minutes now. In the 30 minutes, the structure is very clearly bearish, similar to the 1 hour, but just in the 30 minutes, we have got this candle closing as well, right? So we've got the last low, this pullback, and this candle closing, which is indicating that in the 30 minutes, gold is bearish. And that's the reason that we sold. So market went up, and we have got this extreme POI order block. But why did I give a little bit of room? Because we have got this equal highs as well. Like I told you, in the 1 hour, it's just a game of liquidity. That means swing highs and swing lows. That's the reason I told you that give a little bit of room, because there is high chance that market is going to take out this highs, and then it is going to drop. So my bias is still bearish in gold, and I'm still looking for lower prices till market takes out these lows, because market has created lots of liquidity over here, right? If we look at this highs, then this high is taken. If we look at this highs, then this high has also been taken now. But if we look at these lows, then we can see that these lows have been respected over here, and from here market pushed up. Once again, when market came down all the way to these lows, once again these lows were respected, and market pushed up from here. That means what? That means that there are retails who are buying wherever market is coming down in the form of support or in the form of trend line, doesn't really matter. But retails are the ones who are buying from these zones, and their stop losses are below these swing lows, right? So that means that sooner or later market has to drop, and market has to come down to take out these lows. That's the reason that we are selling, because we know that the liquidity of the retails is over here, because over here the liquidity has already been taken. Over here the liquidity has already been taken. Over here the liquidity has just now been taken. So that means all these liquidities are taken. So where is the liquidity now? So now the liquidity lies over here. So that means there is a high chance, a high probability that market is going to drive to the downside to take out this liquidity very, very soon. So that's the reason that we are selling gold. So if you have sold, that's completely fine, because we are trading with the trend. We are trading with the liquidity. As you can see, where the liquidity is, liquidity means retail stop losses. So if market is respecting the zones, if market is respecting the zones, that means that retails are buying and their stop losses are below the swing lows, right? So that's the reason we are trading with the trend and with the liquidity. Okay, so I hope that is clear. Why did we sell? What is the reason behind it? And if you sold, then it's completely fine, because I told you market is going to take out this highs. So make sure that you give little bit of room. Okay, so now what we want to see is this candle, this 1 hour or 30 minutes candle, to close back below this low. If that happens, then we will know that those who have sold from here, those who have sold from here, they have been taken out because their stop losses are just above the swing high, right? So they have been taken out, and now market is ready to reverse to the downside to take out these buyers, those who have bought previously and their stop losses are below this swing lows. So they will be hunted next. Okay, so that's the reason we're looking for a sell opportunity in gold. And if you have taken, it's completely fine. Wait for this candle to close back below this swing lows, and if that happens, then you can add one more position. Okay, you can add one more position to the trade you have already taken from here. Then you will have a better DCA, that means dollar cost average. So you have already taken a position from here. Once gold comes back and closes back below this equal highs, in that case you can take another entry from here or wherever it closes. So then your average is going to be somewhere around here, so it will be much better. And then you can hold the trade all the way to the downside to take out all these lows. Okay, so that's the update that I have for you in gold according to the structure, and that's the reason we sold. Okay, so market is just hunting liquidity. Market has taken out the equal highs, and now it has trapped the buyers, or like we say, inducement. It has induced the buyers, and now it should go down. So let's see how this plays out. This is my bias, and that's why I told you to look for a sell in gold. Yes, this kind of markets are obviously very dangerous to trade because there is nothing over here. There is no trend over here, right? Market is not creating any kind of, you can say, higher highs or higher lows in the higher time frame. This is all just a sideways range, and here you cannot expect market to move in a very sharp way like this. Here this is just going to be a game of liquidity. Market will create liquidity like this. It will range, right? It will create the equal highs and equal lows, stuff like that, and then it is going to sweep out these lows and then push. And once again market will create the equal highs, and once again market will take out the equal highs, and then it will drop. So it's just a game of liquidity. It's a ranging market, nothing else, right? So both the buyers will get trapped and the sellers will get trapped. Both of them will be trapped. So you have to understand where the liquidity is. If this high is taken, okay, where is the next liquidity? The next liquidity is going to be at this low. Why? Because if you look at the internal structure, then here you will see that previously when market came down, market respected this zone over here, right? Market will do something like this. So that's the reason when market drops, there is a high chance that market is going to target these lows, because there is retail liquidity just below these lows. Okay, but this is not something that you should trade. That's the reason I did not take any trade throughout the week. We just took a trade on Monday, I think, and after that we did not trade gold throughout the week because this was just a messy structure, a sideways structure where there is nothing to trade because there is no momentum in the market. So right now, if you want to trade, you just have to play the liquidity game, and you have to understand where market is going to head next according to the structure. So since the structure is bearish, market gave this downside candle closing in the 30 minutes. That's the reason we took a sell, and our target is going to be this trend line lows. You can also draw a trend line over here. So those were trend line traders. They have bought and they have seen that market is respecting the zone again and again and again. So once again, when market comes down, market will actually respect this zone as well. Market will move like this, but then market will take them out, and this will be a very quick drop, And once they're taken out, market will test our daily POI over here, something like this, and then market will give us a structure shift and move away from here. You will see a very strong displacement once all these stop losses are hunted. Okay, so this is what the plan is in gold, and today is Friday. Good thing is that the weekly is still looking very good, and if the weekly closes above $4,500, $4,550, in that case next week also you can expect that gold will continue after it gives a pullback, because we can see weeks on the upside. So there is a high chance that with the starting of the market next week on Monday, you will see a pullback initially, and then market will push to the upside. So it will be something like this. Initially market will drop, and then market will expand to initially take out this high, right, which will be the high for this week, and then if it wants to continue, then it is going to print a green candle next week as well. So that's what we're looking for, and market is obviously in the higher time frame, it's still very much bullish. There is no doubt. In the weekly, market is bullish. In the daily also, market is bullish. It's just a sideways structure, sideways range over here, because there is no news, there is no fundamentals that can move the market in a big way. And also technically, I told you about the structure very clearly. We have got the 5 waves, right? 1, 2, 3, 4, and 5th wave. And the 5th wave has exactly hit our target, which was at 100% extension level of the wave A, which was around 4,633. And that's the reason that you can see this kind of rejection, which is obviously expected, because this was 100% extension of the wave A, and this is a very important level. But the chances of that happening seems actually quite low, because still now the lower time frame structure, the microstructure, is still bearish. So there is a high chance that market will initially give a drop, test this last breakout level, and then market is going to push to the upside. Okay, so I hope I'm clear what we're looking for. And yeah, so let's see how this 30-minute candle closes. We have still got 14 minutes left. The high has been taken, which was expected. And now, as I told you, if market comes down and closes below this low, then you can take another position, but make sure that you just lower your risk. You do not take big risks in this kind of trades, because these are counter trend trades, right? The higher time frame is still very much bullish, like I've shown you. So these are against the higher time frame trend, and we are trading just based on liquidity in a ranging market, which is highly dangerous. So you have to lower your risk. This is just for, you can say, just to test out like whether you are able to read the liquidity correctly or not. That's it, nothing more. Okay, you do not want to make huge amount of money from this kind of setup or this kind of trade. This is just for you to be able to understand how liquidity works and what is the intent of the market, what market wants to do next. So that's why you are just testing out this kind of you are taking this trade and testing out your setup, like, is market moving what you are thinking, is it aligning with your view or not? That's the reason. And this kind of market, obviously for a beginner, you have to avoid this kind of market, because these are highly dangerous market. There's a sideways market, just playing with liquidity, nothing else, just playing with liquidity. Okay, so make sure you do not fall in this kind of traps. Avoid this kind of market. Market will once again gain momentum, break out of this range that market has created, and when that happens, you will again see momentum in the market. You will again see market creating major highs and major lows, all-time highs. So that is the market that you want to trade with. There is a very good momentum. So avoid this kind of market. I'm just giving you this like as a sort of, you can say, teaching to be able to read how liquidity works and how we can read the structure in the lower time frames. Okay, so yeah, like I said, now market should drop. So let's see what it does. Let's look at the 15 minutes. Okay, so this 15 minutes candle has closed above the previous candle's high, so there is a chance that this 15 minutes candle will also push to the upside. So let's see what it does. Let's go to the 5 minutes. Okay, in the 5 minutes we have got a candle closing and then another closing back. Okay, but still there is not much bearish pressure yet. Anyways, like I told you, this is a sideways market, so you won't see a massive move. Even if it drops, it will just be sideways for a couple of you can say hours, and then it will start to drop, because overall structure is actually sideways. There is no there is no trend in the market right now. So let's see what it does. It should drop from here because it has taken out these equal highs. The sellers have been hunted, and this high is a very important high, and this high should not be taken, because those who have sold, now you have to understand, see, previously the market was bearish because market created this high, this low, this high, and then market drops, right? Market drops all the way, but market does not take out this low, right? The extreme lows have not been hunted, and then market goes up. So when market goes up, the sellers are looking to sell. Sell from where? Sell from, let's say, 30 minutes. Let's go to 30 minutes. In the 30 minutes, I can see we have got this zone. So the sellers are going to sell from here, right? This will be the short position. Stop loss will go above the high, and they're going to target this low. See what happened. Market initially reacted from this zone, right? So this is just a trap for more sellers to come in. This is an invitation to sellers that please come in. We are going down from here. But market refused to go down from here directly. Market went up and took all the sellers out. All the sellers out. The sellers who have sold from here due to this candle reaction, the stop loss was above this high, they have been taken out. And those who have thought that let's be safe with the stop loss, their stop loss was above this high, and they have also been taken out, right? It was above this high, and they have also been taken out. Once all the sellers are taken out, then market makes its move, right? So that's why this high is a protected high, and this high should not be taken in case market still continues, wants to continue this bearish move to the downside to target this relatively equal lows, which is at this trend line. See what gold is doing. See, I told you. Do you see what gold is doing? Exactly doing what I told you, right? So this is liquidity. This is the read of liquidity, right? Go to 1 minute. Do you see what is this? Now you see the selling pressure coming in, right? Now you see the low has been broken. What is this? This is what I was talking about. This is the read of liquidity, guys. The equal highs have been taken. Okay, so where should it go next? Now there is no liquidity over here, and I was talking about this high, right? Because now this high should not be broken in any way. And just below this, we have got this high over here. And then market expands to the downside, right? And when it expands, it has also created this highs over here, which are equal highs. And then what happens? Market drops all the way to the downside, creating a breakout structure. But market does not take these lows, right? Do you see that? Market does not take out these lows. Not a single low has been taken. Market respects this demand zone, this wicks. From here, market expands. So now what do? We wait for market to take out this high, right? So market takes out these highs, and then market starts to give its original move, which is to the downside, because now there is no liquidity over here. And like I already told you, this high is a protected high. This should not be taken. There is no liquidity above this high. No liquidity, because the retails sold from this zone, right? So all the seller stop losses have been hunted, so that there is no retail liquidity over this high. So there is no point that market should ever go up till this high if it wants to continue the bearish trend. Do you understand? If you're watching this for the first time, and if you're seeing this kind of market read for the first time, then it obviously is going to be too much for you. So do not worry, you just have to keep learning these things. You just have to watch the stream again and again and again and again, and with time you'll understand, right? With time you'll learn. Yes, I already told you, right, that No, we haven't taken any re-entry yet. For re-entry, we have to wait for this candle to close, right? I told you that our entry was over here and our stop loss would be just above the equal highs. I told you give some room above the equal highs and hold the trade, right? And wait for this 30 minutes candle to close. If this comes back and closes back below this lows, then you can re-enter. But I can see that the sellers are very strong right now, which is expected. Okay, no issues. So you can see that the sellers are very strong right now. It's not the sellers are strong, it's the buyers. SL have been hunted, right? Those who have bought initially over here, they have been hunted. After that, the sellers who have sold from this POI over here, which we also did. But I told you that keep your stop loss above these equal highs. I told you, right? So I hope that you did that. So those who have sold from these POI, their stop loss was just above the swing high. And I told you that give little bit of room, keep little bit of room for the stop loss. Do not keep very tight stop loss, right? Because there is a chance that these equal highs will be taken. And once they'll be taken, then market will drop to the downside to take out all the trend line buyers, because that's where the next liquidity resides, right? So if you have sold, then you can let me know in the comments that you have sold and you are still holding the trade, right? Because I've already given you a very comprehensive understanding of why we sold, what was the reason. And just with the starting of the stream, I told you that you can look for a sell, keep your stop loss above the swing highs, give a little bit of room, because these are equal highs, there is a high chance that they will be taken. So you can see the kind of move that gold has given, right? So this is what happens when market takes out this kind of liquidity, which is very, very simple to understand if you can read the structure. Still holding? Great. That's the thing. You have to believe in your analysis, right? I'm not just giving you trades like that. I'm not just coming and blabbering around, right? I know what I'm watching, and I'm coming at a time when I can offer you with something. I was waiting for a setup to form here, obviously. And once I saw the setup, only then I came live and I told you directly, just look for a sell. Take the sell, put a stop loss above these equal highs, give a little bit of room, because there is a chance that market will take out this highs and then it will drop. An exact thing has happened, right? So this is what liquidity read is. And here I also told you, if you remember guys, that market is going to respect these zone as well, just like it did over here. I told you when market comes down, market is going to respect these zone as well, but this will just be an inducement for buyers, and once that happens, then market is going to drop, right? You see, market exactly moved as expected. The trend line buyers have been taken out, the stop losses have been taken. So if you have sold, then make sure you book your partial. You can book 70% of your profit over here. The next target is going to be at this low, which is at $4,570. Okay, you can also put your stop loss to break even, because now this high is a protected high and this high should not be taken, just like this high, just like this high. Now this high is a protected high and there is no retail stop loss above this high. Okay, so if you have sold, then make sure that you move your stop loss to break even, or at least bring it to 50% of the stop loss, because there's a possibility that market can reverse from here itself, because this whole structure is a ranging structure. So something like this can also happen, that once market takes out this low which has been taken, that market shows again a bullish reaction, goes out, creates some kind of POIs over here in the 15 minutes or 5 minutes, and then market will drop once again. Okay, okay guys, so those who had belief in my analysis, those who had faith in my analysis, thank you for showing your faith, and I hope that you made some good profit, and you can still hold partial till this low at $4,570. And if you have learned something from this trade, then make sure to like the stream. And also, if you're watching me for the first time, subscribe to the channel. And also for more updates, you can join my Telegram channel. You can find the link below in the description. It's a beautiful move. You can see how quickly this move happened. Why? Because the market has taken out all the sellers and then market has dropped, right? And now market has taken out all the buyers over here as well. Those were previously bought and those were expecting gold to reverse from here after a ranging market once it breaks out to the upside. So now they have been hunted as well. And now there is a possibility that market can reverse from here very, very quickly. Okay, so I hope that you have taken all your profits off the table, because market has completed our move. Both the targets that were shared with you have been hit. This was the first target and this was the second target. Let me know if you have made some profits and how much profits you have made. If you want to share, then you can share in the chat below. Now let's look at so this move is done, so I'll remove everything. Okay, so now let's look at the daily. In the daily, market has tapped into our POI, right? Okay, so now we have to be very careful, because in the lower time frame, as I've shown you, market has taken out all the buyers, right? All the buyers have been taken out with a massive red candle, and market has tapped into the daily POI. So now if it shows reaction from here, it can reverse from here as well. So you have to be ready for that. So let's see if it gives anything from here, then we can look for an entry. But since this is a daily POI, so we have to get a higher time frame confirmation, like a 1 hour. Okay, so basically you have to wait for this candle to close and the next 1 hour candle to close, and how market reacts from here. That will be very important. So let's see what happens. I'm going to mark the whole zone, because this whole zone is important. Okay, let's see what market does next. In the 1 hour, okay, I'll keep it at all intervals. Okay, now one thing I told you previously, that the weekly closing will be very important, right? So keep that in mind. If the weekly closing happens below 4,550, then this is not going to be very good for gold next week. So we want to see now buyers come into the market and hold this zone, right? There will be a battle obviously over here between the buyers and the sellers, and we want the buyers to win and give us a closing above 4,550 for the next week to also be bullish. If that does not happen, and let's say it comes down, closes below this low, in that case it is going to look actually bearish for gold next week. Okay, so keep that in mind. So you have to focus on how this candle closes today. Very important. For now, let's focus on the daily POI and see if market gives any good reaction from this zone. Then we can look for some kind of an entry. But for now, market is definitely very much bearish, and we have to just wait and see what market does next. If it gives any kind of a strong reaction from this zone, only then we will look for an entry, because market has taken out all the buyers out of the market, and now it's a good time to trap the sellers as well, right? To trap new sellers, because now market has broken. If you look at the structure, if I remove everything, if you just forget the structure and everything and just become a pattern trader for a second, what do you see over here? Do you see any kind of pattern? Let's go to the 4 hour. Do you see any kind of a pattern over here? Do you see any kind of a pattern? Yes, there is a pattern, right? This is a head and shoulder pattern, right? Do you see it? Yes, this is a head and shoulder pattern. So the neckline has been broken. Once the neckline has been broken, the sentiment is massively going to turn bearish, right? So that means new sellers are going to come into the market, and it's a very good opportunity to trap new sellers. And market is always looking for traps. It is always looking for traps. It always tries to trap other buyers or sellers. So it's a very good time and an opportunity and a place where market is, if it wants to trap new sellers and then go back up, give a strong closing above 4,550. In that case, gold can push once again to the upside next week. So let's see what market does. What is the intent of the market? Okay, so this candle's closing will be very important. We have to see where this candle closes, because this is the zone where the buyers should once again come into the market if gold wants to reverse from here, because like I told you, there is a high chance that the sellers can get trapped over here, and then market can take their stop loss and push higher. So let's see how this candle closes. It's going to be very important. This will decide where market will go next. And most importantly, like I told you, the weekly closing will be very, very important. So make sure you watch how the closing happens. That will decide where market will go next and how it will go. Okay, so as I can see, market is reacting from the zone, which is a good, very good initial sign for the bulls. So let's see what market does next. So we have got a top of some sort, because as I can see from the structure, we've got the A, B, C wave, right? And we've got clear 5 waves inside this wave C, and market has dropped and is broken below the wave 4 low. So we have got some sort of a top over here. Now, whether this is a major all-time high or not, we don't really know till now, because it has just broken this last low, but we have got some sort of a top over here. So now there is a high chance that market can actually give us a very decent pullback. That is very much possible. If that happens, and let's say looking at the current market and the market structure, if the weekly closes below $4,550, in that case, if I just talk about the weekly, then there is a chance that market can give us a drop all the way to the downside to take out this low. Now this is, I'm talking from a weekly perspective, okay? Because if I take you to the lower time frame, let's go to the daily. In the daily, the net is actually, I think, slow today, or it's a problem of Wanda. I think it's a problem of Wanda. Let's talk about it in FXCM. Okay, so in the weekly, like I was saying, if market closes below this low, below $4,550, in that case there is a high chance that it is going to drop to take out this low, which is at $4,275, right? Because in the weekly there is no POI over here, which can once again push gold to the upside. So it has to come down to take out this liquidity, right? All the buyers that were bought from here previously, they have to be taken out of the market. And now if I take you to the daily, in the daily, if I show you over here, then you can see that market has actually created relatively equal lows, right? And what is there just below this levels? So we have got a weekly POI. We've got this weekly POI, right? Just below this equal lows. So there is a very high chance that market can come down all the way to take out this equal low and tap into this zone, and from here push once again to the upside. Now this is, I'm talking from the weekly perspective. So if this happens, if the weekly closes below 4,550, there will be a very high chance that market will drop to take out this low, tap into this weekly POI, weekly order block candle, and from here become bullish once again to go for $4,643, which was the last high. Now let's look at the daily time frame. In the daily, we have got one POI that I can see, apart from the POI, which is testing, which gold is testing right now, which is this one. So we'll see what happens from here. But if market drops below that, like I said, and if it closes below 4,550 today, in that case, we have got this zone. So this will be the first zone to look for next week. But there is a less chance that market will hold this zone and become bullish from here. Because if the weekly closes below previous week's high or below the last high, in that case, there is a very high chance that market will come down all the way to the weekly POI and from here become bullish once again. Okay, so keep that in mind. So these are the two zones that we'll be watching for in case market today closes below $4,550. This will be our first zone to look for an entry, for a swing entry. Obviously, according to the structure in the daily, this is going to be our target, right? This will be our first daily POI or the first higher time frame POI that we'll be focusing on. But if market does not respect this zone, in that case, like I said, there's a very high chance that market will come down all the way to the downside to tap into this zone. Yes, there is another daily POI over here which is unmitigated, but there is less chance that market will hold this zone because very close to this zone we have got a weekly POI. So there is a high chance that market will come down all the way to this POI and from here it will become bullish once again. Okay, so you can catch a very nice swing setup if market comes all the way to this zone, and from here you can catch a very good swing setup in gold. Remember, the higher time frame is still very much bullish, and we're still looking for higher prices. The trade that I gave you today, this was a very short term, very high risk liquidity play that we took, and yeah, it played out. It was good, but the point is that a higher time frame is still very much bullish, and we're still looking for higher prices in gold. Okay. So next week, this will be the two zones. You can mark the zones on your chart. Once market drops from here or from here, we'll be looking for entries with lower time frame confirmation. Okay. But first of all, market is testing this zone, which is also the first POI, which was the last breakout level as well. So let's see if this resistance is able to turn into support or not. So for that, we have to wait for the closing of today. In the 1 hour, obviously market is still bearish. As market closes below this low, then we'll have a market structure shift below this low. Okay, not a market structure shift, this is a breakoff structure. So we can mark it as a breakoff structure if you want to mark it. But more importantly, market has tapped into this daily zone. So we have to see how this candle closes. If this candle closes above 4,550, then there is a chance that market can slowly show recovery from here. After spending some time over this zone, the buyers can once again come into the market and push gold to the upside and give a closing above 4,550 today. If that happens, then next week market is going to directly push from this zone. So we'll look for POIs from this zone, and from here we'll look for an entry to target the last high. But if market closes below this low, then there is a high chance that market will continue this drop and give us a closing below 4,550. In that case, I've already shown you the two zones to look for entry next week. So let's see how this candle closes, and based on that, we'll figure out what will be our next move. But overall, I'm just looking for higher prices in gold. This is a very nice reaction, by the way. You can see market took out this low, tapped here, and from here the buyers are showing up, which is a very good indication. And if this candle closes above this high, then this will be much better, a much stronger confirmation that the buyers are really strong from here. Then it can recover much more quickly. Okay. You can see the 30-minute candle. I told you that market can recover very quickly. Why? Because all the buyers have been hunted, right? All the buyers have been hunted. Okay, so based on how this candle closes, we'll determine what to do next. But the overall structure is still bullish. Okay, so you are talking about this gap. I don't think actually there is a gap over here in all the brokers. I think it's only in Wanda. Yeah, I don't see any gap over here in FXCM. Let's look at forex.com. Here also I don't see any gap. So yeah, I think that this is just in Wanda. I don't think that this is everywhere. So yeah, this is not a very important thing. You can ignore this and just focus on the POIs. Okay, let's look at silver once. We haven't seen silver at all. Okay, so silver is also dropping. Okay. Silver is much bullish than gold. The closing also much higher than gold in the weekly. So yeah, silver has already tapped this initial daily POI and it has already respected, and from here gave a strong expansion, but once again came down to test this zone. Let's go to the 4 hour. Okay, I don't see anything in the 1 hour. Market has taken out this low. Okay, so I don't see anything over here. This has already been taken. Nothing over here. So silver, what I can see is that if market drops further, then we can see this low get taken. And once it is taken below this, what I can see is some more daily POIs. We have got this zone. This will be the extreme POI in case silver drops all the way further. But we can also focus on this fair value cap because this is the dealing range from this low to this high. And here if I use Fibonacci retracement tool, then below 50% or from 50%, whatever POIs exist, all of them are important. So just below the 50%, we have got this fair value cap. So this is also going to be important. So we have to focus on this zone as well. Okay, so this whole zone will be important. This will be the first POI to look for an entry next week. And if it drops further, in that case, you'll focus on this extreme POI. Okay, this is the extreme POI in silver, and the structure is very much bullish. So silver will definitely push higher once again. In the weekly also, the closing is much higher if compared to the last high. So overall structure is very much bullish in silver. So next week also you can expect silver to expand, and if silver goes up, then obviously gold is also going to follow, right? Okay, so very nice. You can see the kind of reaction that gold has given. I told you that market can show very strong recovery because it has taken out all the buyers, and it can also I told you, right, it can also be a very good trap for sellers. Do you remember, guys? If you can learn and if you can focus, you can learn so much just for free if you just listen. I told you that the buyers have been hunted, the sellers have been trapped. There can be a strong recovery very soon. Okay, so those who learn will learn. Okay, so we have got the 1 hour very strong reaction from the daily POI, right? And obviously there is no POI in the 1 hour time frame. In the 15 minutes also there is nothing. In the 30 minutes also there is nothing, just a very strong candle to sweep out this low and then a reversal. So now just wait for market to make some POIs over here in the 1 hour, and then we can look for entry to target this last high. So let's see how this candle closes. If it closes above this high, above 4,570, then this is just going to be a seller trap, or you can say a liquidity sweep, whatever you want to call it, doesn't matter. And we can follow up in the next candles. We can look for entries towards the buying side, obviously, because we are going to target the last high. Very simple. So let's see what gold does next. Obviously the reaction is very much bullish and we're looking for higher prices in gold. We're expecting gold to once again recover from here. And if the weekly, like I told you, closes above 4,550, then next week you can expect that it is directly going to push higher, and it is not going to drop to the POIs that I talked about, the daily POIs that I talked about. It is not going to come down to test those zones. So you have to focus on the weekly closing. That's the most important part. Okay guys, if this stream is helpful, make sure to like the stream, and if you still haven't joined the free Telegram channel yet, then you can join this. The link is in the description below. Okay, guys, it's been a long stream. I think I'll just wrap it over here. And I've discussed quite extensively what we're looking for in gold. So I hope that everything is clear. If you have any queries, you can ask me in the chat now, or I'll just wind up this stream, and whatever happens next, I'll update in my Telegram channel. So make sure to join this. The link is in the description. This is a major trend line. If this trend line breaks, then the sentiment will massively turn bearish, and you can see a good drop in gold. But as long as this trend line holds, there is a chance that market can recover from here. And as I can see, we've already talked about the liquidity and all, right? The trapping of the sellers, everything has been discussed in detail. And I told you that we can see recovery from here as well. So if you just learn from that and understand that, then you can expect gold to recover from here. You don't need to focus on trend line or anything else. You just understand liquidity, how market moves, how the buyers and sellers are trapped, how orders are generated, liquidity is hunted, fuel is gathered for the next move. If you understand that, that's enough. Okay, you don't need all the trend lines and stuff. Okay, this is a nice closing, but you have still got 4 minutes left. So if this candle closes like this above 4,570, then you can expect direct recovery from here, and gold is once again going to target $4,643. And obviously the weekly closing is going to be above 4,550. So next week also gold will be bullish. Yes, we will see a pullback initially, and then gold will once again start to push higher to target the high of this week's candle. Okay, so I don't think you have any queries or anything like that. So I'll just wind up the stream over here, and more updates will be shared in my channel. So make sure you join this, and I'll see you next week, or maybe with a weekly analysis video as well, depending upon how the weekly candle closes. Maybe I'll share an update. So let's see. Yeah, so I will see you next week. Till then, take care and trade safe.